CPI print today, but the ECB just voted no change for the interest rates. Welcome to another episode of Market Buzz, ladies and gents. Welcome to another episode of Market Buzz. Today we have the important CPI print. The whole market is waiting anxiously after a couple of months. Finally, we get a little bit of clarity to see whether we go up, we go down. Does the Fed print? No print. Is the rest of the world in a crisis? Is America in a crisis? Is it over for the AI story? In today's episode, we're going to touch on all of these different points. But first things first, we're going to talk about the CPI data. CPI is in about 15 minutes. We are doing a little overview of what to expect. I want to get an idea. Like, what's your prediction for CPI year on year? Just the basic, the headline.
So what's the expectation? 3.1?
I think the expectation right now is sitting at 3.1. Yes. By the way, I'm with Dimitris and myself. Check out our portfolios down below in the comments. We are popular investors. This is not financial advice. This is just the research and analysis that we're doing, given to you free of charge. But okay. So yeah, expectations is 3.1. Expectations is 3.1.
So my expectation is we are right on expectations, or just like a hair below it, like 0.1% below it. And always trying to think rational and logical. The unemployment rate just went from
4.5 to 4.6.
4.6. So if that 0.1% is going to increase inflation, then we are like in serious trouble, right? So my mind trying to think rational, and this is a very difficult thing to do when you have a lot of money in stake. Your head is playing tricks on you.
Yeah.
So I say we go right on estimates. The better news will be just 0.1% below estimates, and that's it. Anything below that then suggests a slowdown. Anything above that suggests a very sticky inflation, stickier than what we would like to be.
Yeah. No, that's for sure, right? Is the idea that like this matters so much, but the reality is like there's lagging effects of all of this different
Hey,
things.
what
Timothy's
the
live. I thought you
hell?
weren't coming. I thought you weren't coming.
No, you started way earlier.
I know. We said it earlier. We're going to go over the data. I did a little bit of research I want to share with everybody, you know?
Oh, okay. Didn't
Right?
know. Sorry, guys.
So yeah, everybody, like that's one thing that Dimitris was just talking about. Is just like sometimes you have a lot of money riding on data like this, and you sort of give it more value than it needs to, where the market seems to be giving more value than it needs to, just because of like a 1 point here, 1 point there. Like, yeah, the effects are big down the line, but not today, right? But the market will act today, right? So it's interesting. Yo, what's your expectation, Timothy? Expected CPI. We're just gonna try to do
I'm expecting it to be lower.
Okay, so it lowers so the expected is 3.1. So what's your call here? Dimitri said 0.1, so 3.
3, yeah, me too. 3.
Okay. Look, I like the thing is just like I don't know, like I just don't think inflation is as big of a deal right now, just because the consumer is hurt and people just don't have pricing power. There's very few places where you can have pricing power. So you know what? I'm gonna call 2.9. Price is right. I'm gonna call 2.9. You know, just for the giggles, right? Like I think it's gonna be lower. Like I don't see anything that leads me towards that. But here, let me share a couple of things real quick for you guys. Let me share here. So the non-farm payrolls, right, like came in like a little bit hotter than expected, right? It came in at 64K. The expected was 50K, but we have to take into consideration the minus 60K revision that they will have. The Fed is taking this into consideration. The unemployment rate came in at 4.6%, which is on the high end of their expectations. It's still within the range of expectations, but it's on the high end. So a lot of people, like the median was 4.5 and the summary of economic projections is 4.6. Retail sales came in, I believe, a little bit hotter than expected. Don't quote me on that because I'm not, you know, I couldn't find the data fast enough. And the average earnings came in actually lower than expected. It came in at 3.5 instead of the 3.6. So Interestingly enough, the summary of economic projection tells you the median is for unemployment was sitting at 4.5 by the end of this year. We actually got the data. Obviously, that data is not fully to be trusted because we have all of the uncertainty. I think it's only 13 days of data that was collected, which creates a lot of uncertainty in this read, right? But we can see the range. The range was between 4.5, 4.5 and 4.6. So it did get hotter, right? The fact that we're in the higher end of that tells you that it is hotter than expected. And then when we have what's it called, inflation, like tomorrow, the funny thing is like I don't think this has happened in a while, at least in markets, where you get CPI today and then PCE tomorrow. So it's going to be very interesting to see how that the market reacts to that, because like the CPI expectations for today are sitting at 3.1% and 3% in over like headline and core, right? But the reality is that, like, okay, like the numbers we're gonna get, the Fed is not gonna pay too much attention. So they sort of shifted the burden of the data to January, in a sense, right? So this is a big. I think this is like important. The market was sort of like negative on the unemployment data because October was kind of ugly, and then we got the November data. I expected the market to actually pump a little bit because of interest rate hopes, like cut hopes. But we didn't see that. We actually saw the turnaround. But the thing is like we're getting so much data. Usually you get de-risking before the data. That's what we saw yesterday, in addition to the AI sort of collapse or AI funding fears that happened with Oracle. That started sort of like a domino reaction. We could potentially have called also like the Japan carry trade could have like sparked up a little bit as people are de-risking just days before. Usually we want to say that people prepare for this, but we know traders tend to be day to day. So yeah, yesterday was an ugly day, but today seems to be a little bit better. Micron had earnings. They were fantastic. I want to talk about that later for sure, because like Timothy was the one that actually put Micron on my plate. And I thought the earnings were on Wednesday, but then I thought the earnings were on Tuesday, but they were on Wednesday. So it allowed me to make a play. And then the down movement from the market let me sort of get into that trade. I don't know. It was like the downturn didn't follow the fundamental story. So this is what our expectations are right here. If it comes in weaker, we expect stocks to go up, US dollar to go down, and the bond yields to go down. This is thanks Financial Juice for providing this graphic, by the way. Very good website. Not sponsored. I just like them. And then if it comes in much weaker, we're expecting US stocks to go up, but I actually disagree with that, because I think if it comes in much weaker, it could start creating fears of deflation, potentially in the American economy, and that could cause some issues. Obviously, it's only 1 month. It's not a trend. Like one data point is not a trend, but we got to be paying very close attention. If it comes in stronger than expected, we could see a retrace in the stocks, a little bit of risk off sentiment as we have private credit fears and liquidity issue and liquidity fears. This could add to those fears, right? Again, we don't know what's going to happen. We can only tell you. But what are your guys' thoughts on this? Because it's like, do you think, for example, like we were talking, me and Dimitris were talking, Timothy, the other day, and it was like, so if we get a massive cut, like if all of a sudden we start going into deflation territory, what happens then?
So my stance is that the market looks prime for a bounce. Right now, it's even trading below the 50-day moving average, the S&P 500, but 50% of the stocks are still trading above it. So that means the breadth is still strong, and we should even have a more likelihood of having a bounce here. I'm even looking at semiconductors. They're really hammered. I don't know if you watched that chart of SOX, and it's really hammered and at oversold levels not seen since April. So you have to note that down, Nestor, and take a trade, because there's gonna be a bounce 1 week or another.
I'm starting to pay attention to the data center plays. The data center plays at current levels are starting to look very appealing now. Because it's like, okay, like they did go up massively. Like if you looked at CoreWeave ended up, I think the top price for CoreWeave was sitting at 200. But right now we're sitting at 60. And it's like, okay, like let me put it in the watch list and let's start analyzing this. Because like now at this levels, it's like, okay, we have all of the fears. Now, the question, and like this is a binary question. Do we get the build out or we don't get the build out? Are we gonna just stop whatever we started building and we're just gonna say, okay, we're just gonna lose money, we're gonna have shadow. If we were in China, sure, shadow buildings that have nothing inside, I would say. But we're not in China. We're not in China. We're in the United States of America, where you rent the American dream. And what are they going to do? They're going to rent the American dream. America's made on debt. So we're going to find people to fund this. JP Morgan said they were going to spend $1 trillion in AI infrastructure and AI buildouts. Like they want to let people borrow. Yeah, JP Morgan is probably going to benefit and the terms are not going to be favorable and the margins are not going to be good, but we're going to see this play out. We're going to, like, we are in a CapEx cycle. It's that simple. I just don't see any story that tells me we should back out of that CapEx cycle, at least for the AI story. So I'm paying attention to the data centers now. I'm starting to. It's crazy.
Which one besides CoreWeave then?
There's Iron. I think they are a financial, like their books look better because they're a financial company that's going into data centers. So that's interesting because it's like they already have like their earnings per share and they're like their profit. Like they were profitable. Yeah, they're not making that much profit because they're spending a ton of money, but they're profitable. So I'm paying attention to those. Again, this is very fresh, like fish on the counter. I haven't even descaled it, right? So it's just an idea I'm paying attention to, just because like after looking at, for example, Micron was a very interesting. It was like, it's just like the fact that RAM prices are going crazy. You can look at the consumer side, and the consumer side is everything is getting scooped up by AI data centers. It's like, you need the one stick of RAM I'm going to put on my PC? Really? And like prices went from $60 to 200 in a matter of 2 months. Market didn't price that in. The forward PE for Micron right now is sitting at 7. If this plays out, 7. A microchip company, 7. It's insane. So it's like, it's looking so appealing. Like the price got better after the earnings because like they just, earnings per share, 100% growth to next quarter.
I think people confusing Micron with Super Micron.
And maybe Super Micro. I actually got out of Super Micro because I'm like, okay, like they do the cooling, server racks, all that stuff. But then Micron is interesting because Micron makes the chips. Micron makes like long-term memory. Like we're talking about very specific use cases here. That so like I feel that Micron right now is sitting where Nvidia was sitting when nobody wanted to buy their chips. But they have the infrastructure to print. NVIDIA had the infrastructure to print. That's why we saw that massive appreciation, and we could potentially see that. And it's not like the idea that Oracle is like, we will sell the data centers to everybody. No, they already have the infrastructure in order to print. They're just going to focus on those customers. So that's very interesting. But yeah, we'll talk about what's on my desk. I guess everybody can guess though. You know.
So, and Timothy just mentioned the semiconductor that is being hammered. And that's logical because ahead of the data, people want to take some profits, perhaps like de-risk a little bit going into today. But thinking about Oracle and whatever happened there with earnings and all the issues they're having with debt, and now OpenAI questionable checkbook they have, if those checks are going to bounce, right?
Dimitri, I don't want to cut you, but we have data in 54 seconds, by the way. So just
let's go.
All right. So I'm going to put in the S&P flow chart in the 1 minute just to see. We want to look at the moves quickly, right? So we're going to put it. Actually, we're going to put it in the 2 minute.
Did we post about the episode on eToro?
I posted a little bit, but you know, if people come, they'll come, and if they don't, they don't. You know. Okay. But yeah, we are 30 seconds away from data here, and this is important because it's like the market seems to be more scared about inflation than unemployment, which is outrageous. Outrageous, in my opinion. Like you want to see price disparity, fire everybody. You know. All right. 10 seconds. Woo! Market's muted.
And when you have the numbers, please give them to us.
We'll do for sure.
Hmm.
2.7. Ooh, 2.7%. Let's freaking go.
Seven.
From the
Core
market.
CPI comes in at 2.6%.
Huh.
Either they're cooking the
2.6.
data, or like they're like, oh, this data we're gonna revise it anyway, so let's cook it. 2.6. Like this is so far the market is liking the data.
I don't like the 2.7.
I don't like 2.7. I think it's a lot.
It's too much.
But we are seeing strength in whoever needs that. So this should help semiconductors. This should help the AI data center build out if we start seeing sort of like cheaper debt coming in. Woohoo! Ladies and gents, this number is crazy. 2.6%.
2.7 is the headline. 2.7 is the headline.
Headline is 2.7, correct. And then I want to see the month on month. They're not giving me the month on month, which I want to know.
Toby's going nuts right now.
Yeah, that's crazy. Now we have PCE data tomorrow. Like I want the month on month. Because that means that what was the month on month expectations on it? The month on month was expected at. So we're talking about 0.1. So core CPI.
So why is it bad to have 2.6?
Because it's a massive miss. The market is not expecting this. So it tells you that there might be something wrong in the economy. You know what I mean? And also the fact that it's like if this continues and we start missing to the downside, we can go into deflation, and deflation is not good.
Okay, so it's supposed to be 3.1.
CPI rises over 2 months. So okay, so they're grabbing the data.
Okay.
So the U.S. November CPI rises by 0.204 over 2 months. This is odd, right? But this is, I mean, let's go to the day. Let's go to the day performance here real quick. Market's green on this, right? But this is, I want to like, I have a feeling this is gonna get like digested and it's gonna be weird. And the fact that Micron had like the amazing earnings it had, it still shows appetite for spending.
Okay, so let's put this whole thing into context. So the last piece of data that we got on CPI was for September, correct?
Repeat. Sorry, the guy was speaking away.
The last piece of data that we got for CPI before today, it was for September, correct?
Correct.
So now we're getting for October and November.
So it's weird because they're telling me that it's like you know, it's like this is crazy. So they're saying that it's like like it's over 2 months. So it's like it's weird.
Okay, so the latest, so the 2.7 is for like
maybe they're comparing September till November, and then they're just saying dividing it by 2.
Or take this. This is the November data, the 2.7, right?
Mm-hmm.
Okay, Jay Powell said to be skeptical about this kind of data. I'm keeping
we can't trust it. Yeah,
we can't trust it. That's number one. Number two, I don't like this drop because it's too much of a drop. The unemployment is 4.6 ahead, like higher than the conservative estimate the Fed gave for 4.5. That to me suggests that the economy might be a little bit in a trouble. Not too much, a little bit. Am I being unreasonable?
Timothy, what are your thoughts? What are your thoughts? Because the thing is that I sort of agree with Dimitri. But I want to get Timothy's reaction on this.
No, my reaction is I'm glad with the results. I mean, everyone was scared that inflation would go up due to the tariffs, and we're seeing it decrease. And now it's up to the Fed to make sure indeed there's no stagflation or deflation. And I mean, market's up. Bitcoin is up 2%, so things look good for today. Now it's up for tomorrow.
The market closes higher today, Timothy, in your opinion?
Yeah, it was a pretty decent drop yesterday, so I think we should see a rebound for
At
today.
least a rebound, right? Because it tells you that potentially we're not as sort of like the market was figuring out, like even my expectations were too high. Like I was expecting 3.2.1, but then obviously like they're cutting that by half, so it's like that's crazy. 2.6, like the actual results were 2.6 here, and then 2.7 here. So that's like, but like the question is why. So we have like I'm gonna have to dig a little bit deeper into the CPI report just to see what was the thing that was getting hurt. Was it services? Because we know that services starting to slow down. So services inflation was slowing down, which sort of like helps the narrative of the Fed, which is like, hey, we're actually seeing the inflation fears from the tariffs, not from anything else. So this would be interesting. I have to dig a little bit deeper. Don't forget to hit that like and subscribe if you want the updated value.
That was such a curveball, the 2.7. That like I was surprised. I didn't expect like a 2.9. I would be surprised with 2.9. 2.7. I mean, we have to look into the CPI closer. Like, so what's the core?
What do you mean?
The core CPI.
The core CPI came in at 2.6. The thing is we also get PCE data tomorrow, which might actually come in hotter, because it's like if this data is somewhat wrong in the way that they collected it, and the PCE maybe did a better job because it's not just survey data.
I don't like this. I'm not gonna like
it. Weird.
It's weird. This is too much. Weird. This is too much, too good to be true.
Like that's the thing, you know. So the question is like, do they cook the data because they know that they were just gonna put it and they just want to cool markets?
And then, okay, let me ask you guys a question. Since I'm watching some politics as well, then Trump. Let's assume Trump knows the numbers, right? Because I'm positive he's not getting the numbers with us. He knows the numbers already. Okay, he wants to know exactly what's happening. Yesterday, he announced that he's going to give $776 to all U.S. In the armed forces. Like if you are a soldier in the United States, you get $1,776, and he's going to give between $1,000 and $2,000 to all the people that they would, like when you pay for taxes, you're going to get a refund for $2,000, right? So is that a coincidence? Or he sees that the possible slowdown in the economy is the best way to give some stimulus to the economy, is to give some free money? I'm just thinking out loud. I'm not saying this is a conspiracy. I'm just thinking out loud, trying to make sense of this number that we got today.
I wonder if the market freaks out on this. I'm trying to.
Okay, $20.
It's gonna be an interesting day today.
Market closes lower today.
You think?
Yeah.
But the thing is look, the market is not taking this like as gospel, eh? Like if we look at the CME project, like the CME expectations, the rate cut for January has just increased by 2%. It's not like the market is taking this as at face value either.
Because if they did, Bitcoin would be up 7%, and Nvidia will be up like whatever it lost in the last 3 weeks, it will be up like at the opening. But we didn't get that. It's confusing. Like right on estimates is the best outcome always. Okay.
Like estimates or a little bit under estimates, telling them, hey, you guys are a little bit wrong. Like what you think is happening in the economy might be a little bit off. Yeah. You know, but it's like it's what we wanted, so it's okay. You know, it's like
this one confuses everyone because we don't know what to think. Is inflation just driving because the Fed did a good job, or maybe the economy is slowing down and the unemployment rate has been creeping up like slowly but surely, and then you're rolling into next year, and then you're running into trouble? Can you put the heat map again up? I want to see that how defense is behaving today.
Defense, okay. Defense is gonna be. Yeah, a little bit on the red, but here, let me show. Screen. Let's do this. Let's go here and bam. Right. So we are seeing sort of the high risk names, or the names that need to continue to perform here. They're getting better. Plus, we're seeing like a small slowdown in it, like energy potentially, like consumer defense.
2% Nvidia up doesn't say much. This is like a regular day.
No, and it's a bounce from yesterday.
Yes. So yeah, it's I don't like this, guys. I'm not trying to be bearish. I'm not trying to be but these outcomes that they are like we're missing off the estimates by a lot, and this is by a lot. Can you ask ChatGPT when was the last time the CPI came so much? It missed.
Don't tell me it's 2007. Don't tell me it's 2007.
Please ask ChatGPT when was the last time it missed by this much, not just missed by this much.
How many points did it miss by? It was 3.1 and it came in at 2.7, so that's 0.4.
Yeah, 0.4%.
The thing is like we can't take it at face value because okay, so here it's like this is a note that the Financial Juice guys posted. The report must be read with caution. October CPI data is permanently missing, and while the BLS was able to backfill some of the non-survey data, the absence of a fully monthly observation reduces precision and comparability. CPI collection only resumed on November 14th, meaning recent inflation trends are being inferred for incomplete inputs. As a result, while the data points to continued disinflation and cooling price pressures, confidence around the exact pace remains lower than usually until a full uninterrupted run of monthly CPI reports is restored. So because we're backfilling, because it's like we're grabbing the data and we're just like extrapolating, is what I'm seeing.
And you think the market is gonna like the revision that the CPI is going to come up higher than expectations next month because this month we were like below? I mean, there is no good scenario that I can like this. That's why I don't like these moves. Like,
it's like we're getting data, but we're getting data to appease the market more than its value. Like because if they didn't show the November data, the market would have collapsed. Is what I think, so it's like they have to give you something, and they're giving you something based on 16 days of data.
Timothy, give us your thoughts. You've been quiet, and I want to see what you're thinking. I want to hear it.
No, I totally get it, the frustration. If you don't get the complete data, it's hard to give a complete picture of what's really happening. I think it's gonna be another month of wait and sit on the hands, because right now, if this data is tweaked, it's not telling the truth, then we have to wait for the next month to see how it's going.
But the next month is the holiday month and the seasonality of holidays. And usually, I mean, I don't know this for a fact, but if I have to guess, inflation runs maybe a bit harder because people are out shopping and they're spending like money, even money that they don't have yet. So you have to wait for February to get clarity on this inflation thing. You see, the market is like reversing a little bit.
I think you know what it is. Market is just like, hey, we just didn't know what was going to happen today. Worst case scenario is that inflation could have been higher. It wasn't, at least for those months of let's say it's half, right? So let's say they extrapolated this and it was like a massive decline at the end of November. Let's just say it's half. Let's say the start of November was flat. Let's just assume. But the thing is, it's like the end of November, you get Black Friday too.
Yes. And Cyber
right?
Monday, and Cyber Monday on Monday.
So maybe it's like, maybe this is a little bit like, like cool. Like it looks cooked. It looks cooked. Is it just, so it's like, I think that potentially it's like, look, like we probably touched 2.9. Like maybe it's coming down a little bit. Expectations for us was that it was coming down a little bit, so we're just going to live with that at least until we get the next data. But then again, December is a very tricky month because nobody gets fired in December.
Yes.
And
you spend
I
whatever
think the Fed should hold. I think the Fed should hold.
You spending whatever you have in your pocket, you spend it in December.
Yeah.
And then some.
I think the Fed should hold.
I
don't think they are. I think we're going to cut.
So do you think whatever we're getting now, we're getting a cut in January?
I think I'm sitting right now at 70% chance of a cut. I was sitting at 75 before this release.
You or poly market?
Me. This is like, if I have to bet, me.
What's
75 we get a cut, 25 we stay on hold.
What's the poly market number right now?
All right, let's have a look.
Yeah, let's.
No cut.
No
change. 76. My odds are like switch. My odds are switched.
25% on poly market. Odds of a cut.
Yeah, correct. 27.
It hasn't
no change. 72 right now.
It hasn't changed since the day that the Fed announced the last cut. I think it was like in the same area, like 22, 23, whatever it was.
Yeah.
Of no cut. So doesn't look likely. And it shouldn't be with inflation much lower than expected. But with this Fed chair, with the next Fed chair, it's going to be okay. Let's get down the rates to neutral. I don't care what the inflation is. But okay, so I'm replaying now the Kevin Hassett. I think I was talking to you, Nestor, or like on Discord, and I was telling you that he was saying on CNBC, we see the U.S. economy having 1% inflation and 3% growth. That was 2 days ago. Or was it yesterday? No, that was 2 days ago. They knew the numbers 2 days ago.
I think they know.
And they go on TV and they speak.
Maybe, why wouldn't you tell and like start sort of prepping the market for it, But I mean, look at this. This is a very interesting chart that I want to show you guys, right? This is the Duff and Bulls, the Duff and Hawk scale, right? And interestingly enough, like we all are talking about like who's going to be the Fed chair. And like, I don't think the president of the Fed, like the president of the FOMC matters too much. Because it's like everybody gets a vote, right? So the question is like, who's voting next year, right? Who's on 2026, right? 2025 doesn't matter anymore. Who's in 2026? And it's like 2026 it's all everybody's sitting by it's all doves. It's all doves. That's why I'm like in the like right now unemployment shows any sort of weakness. The problem is like when unemployment starts to show, you're not going to be able to stop it. Yeah. Adrian says Santa rally coming to town. Okay. I have a comment and I have to say this. So, have you seen that Santa comes in and he comes in a red suit, meaning that stocks tend to actually underperform during those times? And he actually gives you the gift and the opportunity to buy and sell some assets in order to get better entry prices. Because I haven't seen in the last 3 years a Santa rally that's actually came to fruition. All of the Santa rallies end up thrown at my face. So this year is no different. I think we're just getting opportunities to get in at good prices. And as long as the story continues, we're going to boom.
There was an interesting statistic on whenever Thanksgiving is positive, you won't have a Santa rally. And whenever Thanksgiving is negative, you will have a Christmas rally. And this year we had a bullish Thanksgiving. So meaning the last 2 weeks of December could be negative.
So the thing is like, even if it's negative, like the thing is like, I think we probably stay flat, right? Like we were at like, I've been saying this for so long already. It's like peak fear. Like yesterday was just like, we had no data. We're finally getting some look at what the government thinks the data is actually like. And now we have clarity. I think that the rally that we're seeing today is more the fact that we're getting data than actual market sentiment or any like or like positive news on the CPI data here. We haven't looked at Bitcoin here either. But by the way, let's just get Timothy's.
it's up 3%.
Nice.
Bitcoin.
Very nice. Okay, let me ask you, Timothy, because I know you're probably going to have to leave soon. So what's on your desk?
So I've mentioned SOX already, but I also added 5% of my portfolio into consumer staples. So that means Coca-Cola, Procter and Gamble, Costco, PepsiCo. So those are stocks that are really undervalued compared to the S&P 500, which is very rare. Just like I spotted the healthcare sector 6 months ago, now I'm doing the same with this sector. And yeah, I'm positioning myself in a more defensive way for the next year. Not really in cash, but more in stocks that are needed all the time, like PepsiCo. Everyone keeps buying those chips and drinks. So I like the company itself. It's a great company with a wide moat. The other ones, I'm not so sure if Coca-Cola is such a great company, but yeah, it is in my opinion a consumer staple that can rebound in the next 3 to 6 months. Yeah, so that's why I allocated 5% of my portfolio to it.
Okay. This is what Adrian is saying, by the way. Usually you have selling early on in December as people and institutions rebalance portfolios and do the loss harvesting and exit positions for the year. Give me a second. The seasonal Santa rally is really just making that drop. Okay.
So Adrian is turning bullish. Did Adrian
Is Adrian buying? Is Adrian buying altcoins?
Because last time we spoke, maybe he should come on the pod
I
another
know.
day.
I sent him the message. I sent
reveal
him the
his
message.
strategy.
Yeah. Because I would love to get his thoughts on it, right? Like the Bitcoin moves have been weird, but sort of like I think one of the comments he mentioned was that as we start because he was targeting 100K, but as we start reaching those numbers, it becomes more and more difficult to get to that. So because people start selling as we start getting closer and closer. So we never hit the 100. We just I think a couple of days ago it was 94. Okay, so
yeah, and I'm currently 2% Bitcoin, so I'm not really hugely allocated into crypto.
I have more crypto than you.
Hmm?
I have more crypto than you right now.
Yeah.
Or lots more Bitcoin. I don't know if they alts and I don't think you have alts.
If Bitcoin can reclaim 99K, that's a decent level for me to say, okay, there is some bullish price action here. I went long heavy
Early in the week, but still bear market in crypto.
looking for a lower high. So he's looking for a lower high. Me too. So we could see a bounce, but I'm not even sure if we indeed get to that 100K level, because everyone is looking to sell. Everyone wants to exit their crypto positions.
The thing is like it's also, but the thing is like also we've seen that in the tech space, like on the data center space, in the semiconductor space. So it's like everybody's just been waiting for a rally to get out, and I'm just like, okay, maybe like there could be a possibility that is done.
Yeah, but crypto and tech, you want to get out for different reasons.
Correct. But you know what? Not so much.
Why?
Because it's still liquidity. It's still private credit. It's still like fears that there's just not enough money for these things to go around and continue to go up infinitely. So there is a little bit of similarity, but I agree with you on the fact that it's completely different. You know?
Yeah, like I want to get out some of my semiconductors because I'm up on them so much, but I want to get out of crypto because it did not contribute to my portfolio anything this year, and there are like other deals to put them to work, you know. So that's...
And Dimitris, do you think next year will be bear market or sideways for crypto?
I don't know if I can answer that question like in the bear market because I'm not a crypto expert, but I'm not feeling bullish into next year for crypto. That's why I've been trying for so long to get out of that Ethereum position,
You had a
And
chance at 4K.
I had my chances, but I was greedy. And I was like, you know what? No, I'm gonna get out when I double. And there you go.
Oh, man, yeah, it's been like crypto has had such a rough year, and it's like it was first April, right? We saw that sort of like decline. There was the euphoria that thing is like it almost feels that crypto's waiting for everything to like this is a sentiment I've been getting with crypto investors sometimes is that they want things to happen really quickly. And it's like it takes time, right? Like the Fed takes time. Everybody
No,
takes
and
time.
you can see like there's a lot of building behind the curtain. I mean, tokenized stocks, payments using crypto, USDC. It's all happening behind the scenes, but it takes time. And the problem is, yeah, people want it to go fast, fast, fast. So now we're not seeing any volume uh, getting into the crypto space. So they're pulling out the money. But there will be a time when, yeah, there is more opportunity when the value is very high and the prices are very low. But right now, it's unclear who is going to be the winner besides Ethereum and maybe
Yeah.
Ondo is a good project within that space, tokenizing stuff. So
Ondo.
Ondo, yeah.
I'm gonna do a little bit of a dig down on
Maybe
that because I have
maybe
no
we're
idea.
gonna have an altcoin season, but only for the assets that are bringing value, and forget about all the meme coins, forget about all the altcoins that are just doing nothing and money grabs. You have to focus, just like in stocks, what is bringing value to the space, and that will be rewarded. So I know many are holding XRP because it's very valuable and it has a lot of real world, how do you say that? It's getting used in real
Usability.
world, yeah,
Yeah.
usability. And you have seen this cycle, those were the coins that did perform better than most of the altcoins. So um, I think the next cycle will be the same, but a little bit more focus on those that are bringing value.
Yeah. Here, let me show what Adrian said. He said, Adrian, it says long equity, short crypto, long metals. I know you agree with this one for sure. We should see a
Yeah,
correction across the board in early 2026, relief rally to 94K. So we are like Dimitris and I believe on a little bit of a correction start of 2026. But the fact that we've corrected so much, not so much, because the thing is, if you look at the S&P and the Nasdaq, it's still sitting at very close to all-time highs. But the fact that we have corrected right now, just before, tells me that hey, maybe the rebalancing is done. Maybe just profit taking, continue to stay invested in the assets that you believe in. So we could see that, right? Let me go over the messages here real quick.
and I agree with gold, silver. They are up a lot compared to crypto. So those who invested in precious metals this year, yeah, it cushioned the downfall of crypto. So I'm happy I did allocate some gold, palladium, and silver to my portfolio. Sorry,
They,
I didn't see what Adrian was saying.
oh, sorry. So he's like, to Tim's point, people expect 100K. Oh, sorry, 100K. So it only rallies to 94K, just like people expect previous bounces to go higher, but get stuck waiting for the next bounce and get out, and it goes lower and lower. Okay, right. And then Toby says, I would say that it's a good consensus. Seems bearish on crypto because it was bullish then, and everybody would be positioned, and then it'd be good. But the thing is like that's one thing I agree with Toby. When crypto explodes and all of a sudden sentiment changes, this goes nuts. You know what I mean? Like big money comes in. Oh, this is what I was going to tell you. XRP has had the biggest inflows into the ETFs, even though the price is coming down. Bam.
I have to go, Nestor.
Bye. I'll put you in the
You
back.
can put me in
Nice
the back.
chatting. Thanks for joining. I thought you weren't going to join today, so I'm glad you did. I'm glad you did.
Uh-huh.
All right, I'll put you in the back.
Nice. Bye-bye.
Bye. Whoo. So yeah, that's the thing. It's like we're seeing the market like, well, nothing. It's not no major move, but it's like, yeah, we're seeing sort of like a bounce from the lows of yesterday, which is expected. I mean, It's just like yesterday there was like a couple of things on top of each other that created a little bit of fear for sure.
A bounce from
For sure.
yesterday, we're going to get that anyway without any data.
Yeah.
Because we are still in the bull market, and we will have some rough days, but we get some bounce back days as well. But I'm so troubled about this 2.7. I'm so troubled with it because to me suggests the economy is getting weaker and the unemployment rate is rising. And then when it gets really close to the 5%, then you see the consumer and the employers start like thinking defensively, okay, maybe now I'm not going to go on that vacation that I was planning to go and spend a lot of money, or I'm not going to hire these 2 extra people. And that's how the whole thing goes. It gets crazy,
Yeah, how the gear starts turning, and it's like
Yeah.
and then all of a sudden it's like this guy makes less, this guy makes less. The thing is like that's why we don't want to see a slowdown either. It's like because it's like
I don't want to see a slowdown. I'm always for the growth. I don't want people to lose their jobs, so be stressed with bills and everything. But getting these results now, if we are wrong and the economy is strong and inflation is just falling because the Fed underestimated the effect of the tariffs on inflation, that's a possibility. Yeah. Then that's a different story. But whatever I'm looking today doesn't suggest that.
No, I don't think so. Okay, let me ask you. So what's on your desk? I guess say BJ's again.
After I just witnessed the numbers, it's like more defense.
Okay.
More defense, like looking for opportunity to get out of some, like getting out of more tech.
Okay.
I'm gonna keep some tech. Like yesterday, I bought heavy into BJ's wholesale, and that's a good pick going into slowing economy, potentially slowing economy. So yeah, my eyes now on different consumer staples. Not really into the things that Timothy is getting into, the Pepsis and all that. But the Costco.
Yeah.
But Costco though is start to looking appealing. It's expensive, I know, but like another 10% down, and I'm like all over it.
Yeah. Okay. Like then we're talking, right?
Then
Then it starts. Yeah. But it's like, man, like Costco. I love this stock, but it's like it's tricky. It's tricky to allocate.
And we're getting mixed signals because the reason for the Costco drop was a slowdown in memberships. When there's slowdown in memberships, suggests that people don't buy in wholesale, but they buy in retail, right? Which is Walmart, which we have that. I think you have it too, right? We both have it.
Yeah. Yeah. I do have a position in Walmart.
That suggests a stronger economy. And then we get this today, suggests something else. So it's a lot of confusion. And if I'm confused, then a lot of people are confused. Market trend and technicals to show alts have room to the downside. Again, too much money too.
The thing is like I do like the thing is like, well, look, they are bearish signals, right? Like the fact that we're sitting at margins at the levels that we're in, the fact that we're starting to use leverage ETFs on stocks and indices and all that stuff that doesn't get accounted to that number. The market is a lot bulkier than it has been in the past. Even options is getting used, even futures is getting used even more. So there is a possibility that if a slowdown happens, it could come in swiftly, right? Like that's one of the fears that I've been having. It's like it doesn't let me fully sleep because it's like anything could derail, and just all of a sudden we could see like that delevering event, margin calls start to happen. Like what we saw in October 10th in crypto, we could see it happen in stocks at a more grander scale, and that could be dangerous, But hey, I'm telling you what.
Could the Fed be so wrong to change their forecast from 1.8 to 2.3 for next year GDP growth? Could they be so wrong?
Well, the thing is one thing that they have mentioned is that what happened, like they have acknowledged the fact that most of the GDP growth comes from AI and the AI build out. So if we don't get that build out, if the fears are real on Oracle, on Nvidia, on the data centers, on Microsoft, Apple, everybody's wrong. The big players are all wrong. This is not going to go anywhere, and this is going to collapse. Maybe, you know what I mean? Like maybe they're wrong, right? The thing is like because I would take away a lot of the GDP. You know, it's like if you look at the rest of the economy growth is not there, right? Like even if you look at Costco's growth, Walmart's growth, it's still not fully there. So the question is like, are we going to continue to see this growth step in and play?
Okay, so let me ask you a question then. After you got this piece of data today, are you glad? Are you relieved? Are you troubled? Are you?
No, I'm troubled. I don't like this. I don't like the miss. I really don't like the miss. I don't like the miss.
You like the miss by a little bit.
Yeah.
Yeah.
Like I'm like, look, but point me in the right direction. Right? It's like the Fed. Like, right? Like I don't want to see emergency cuts. I don't want to see emergency cuts.
Or the market expects 0.25 and they come up with a 0.5 out of nowhere.
And you're like, why are you choosing to do this? What did you see? What piece of data made you do this?
Yes.
Like, because it's usually like 1 point. And it's like, the thing is like, for me, like, they have been, so it's funny because usually, like, whenever you read the statement is like, I think the statements in the last couple of meetings have been dovish, right? That's the reason I'm leaning towards a cut in January. Because it's like, if you stop and go, it becomes weird. It's like, okay, why did you stop? Why? And that's just like a slowdown in the rate of cutting. Because it's like if it takes 2 months, you just divide it by 2, and it's just that's the rate that you can cut pretty much. But I just don't like the fact that, like, I forgot what I was saying. I blanked. I'm like
thinking about the Fed.
But yeah, I don't like emergencies. Yeah. I don't like emergencies because the thing is, it's like, and this feels like an emergency cut. Like this feels like it's like if the numbers are this bad, like obviously we're not taking them at face value, which is good that they said that already. So we're hoping that continues. As long as it continues, we'll be okay. But the moment they start sort of getting weird and stuff, it's like I just don't see like inflation has never been a fear for me because the thing was like when tariffs first came, if they had stayed where they were initially, it would have been crazy, but it wasn't. Like we are seeing that like the base rate is 10%. That was my base case.
And the 10% across the board just contributed to 0.2% of inflation. Or 0.3 at the worst case scenario.
We continue to see
miscalculated the impact of tariff on inflation, and this is what I don't know. I'm just troubled. I'm gonna have to sit and think about this because this curve.
We have to dig a little bit deeper. Yeah. Like this is just like in your face data, but it's like what happened in the report? What's going on in the report that's causing this? Why? Like, what are they assuming? Is it like rents? Is it products? Is that like what went down?
The question from Toby.
Yeah. Because they're not trusting it. They're not trusting it. Man, Toby, like if Toby for Fed chair, he'll give us money. Like Toby would be like, everybody get paid negative interest rates.
So why not do an emergency cut? I mean, we had a meeting last week. If they come out this week and do an emergency cut, then that suggests that we're in trouble.
Yeah, they can.
Yeah, and then it's like the market is going to assume the worst, and then you know how we go. And was that if Dimitris is right about that this inflation, they need to emergency cut.
Yeah, but we didn't get this inflation. You know what I mean? Like we didn't get this inflation. We're not getting this inflation. It's just the rate of inflation is dropping faster than we anticipated. So it's like this doesn't deserve an emergency cut. And the fact that the data is not complete and the fact that they're like throwing darts at the wall just to see what sticks.
And to answer Toby's question, I don't think they're going to run and do an emergency cut. But if they weren't thinking about doing a January cut, if this data is real, right, then they're probably going to do it January.
I think they are. Like I'm leaning towards the fact that they're not. We've entered a cutting cycle, and we're going to go into the cutting cycle until we become stimulative. And right now, there is a little bit of easing from the balance sheet, which helps, even though it's short term. It helps because they can buy 52-week treasuries, and they still can input that sort of liquidity for big banks and big institutions. It's one thing. And then you have the other side, which is like that interest rates coming down. Is it above expectations? I think Fed, what was his name? Give me a second. Fed Waller said that right now we're 50 basis points into the restrictive side. So that means that 2 potential more cuts. And the question is when do we get those cuts? Potentially faster. If like all of a sudden we look at the PCE, the PCE didn't, I don't think the PCE accounted for this at all, which is insane. You know, it's like let me have a look at let's look at just inflation. Inflation was between 2.8 and 2.9. We can say it was like 2.8, 2.9. Like, I think it's okay. Like, I think it's within the parameters. Like, I don't think the 2.7 maybe is too much because maybe Black Friday plays into the equation. People are not spending as much because the money's not there, XYZ. So let me have a look at what Toby says because, oh, lol. I think it's a gamble to waiting until the January meeting, but that's what this Fed is like, more precautionary. No, the thing is like, so the Fed didn't do meetings. I think Waller, what was his name? I think, what was the guy that had inflation go like massively up? I'm blanking. The Fed.
Are you talking about the 70s?
Yeah. What's his name?
I don't remember his name.
It's
the guy before Volcker.
Volcker. No, Volcker rates.
The one that got it down.
Volcker got it down, but he had to increase interest rates. But I don't did Volcker have meetings like this? Like
I think, and I'm not 100% on this.
Like I have to dig. I want to do an episode on this to kind of like explain.
He got it from low single digit to 15%.
Yeah. Volcker, yeah. But he increased interest rates drastically. Like yes. There was there was, the Volcker era. They still call it.
I thought you were talking about the guy who increased inflation, like the guy before him. But Volcker was the guy that got inflation.
But the fact that the fact that they're giving you the summary of economic projections, the fact that they're giving you so much transparency. Before it was just like you just one day that you would just find out that the interest rates were higher, and it was like, oh, like the Fed has changed so much.
You woke up and you read on the newspapers what happened. Now you get the press conference and a Q&A, and we see them talk about it and debate it. And the transparency now is more than what it used to be.
Yeah.
But before then, it wasn't like an industry like it is now. Like the stock market is not like an industry as it is now, that we sit and debate and we give our thoughts and we bet on it and poly market and all that. It's almost like a game now.
Yeah.
Let me say one more thing about the emergency thing. Just to give people an idea why an emergency cut is never a good thing.
You lose trust
in everything in life. When do you hear something is an emergency and it's a good thing?
Yeah. Oh, the fire! What are we talking about? Like it's not good, right? It's like stay in the process. Hey, we're slowing it down. Like we're already 1.75 points down from the highs. Like relax. It's okay. If we need to cut more, we're gonna cut swiftly. Like relax. It's okay. But right now the market is not pricing that in because the Fed doesn't want them to price that in case that they need to price it in. That's the thing here. So it's like for me,
The Fed is not happy with today's data either.
No, they're not. It's not stable. You know what I mean? It's not where they want it to be. It's not like they've called 2% like long run inflation for the longest time. We don't see that. We're expecting long run inflation by 2027 to hit 2.1. I
bet you Fed Powell, when he got the data, he called someone and said, "Are you sure about this? Are you sure about this data? Like because something is."
The guy was like, "No." No, I'm not. Like, no, this is the number that comes up, like
the envelope went from the Department of Labor, went to the warehouse.
The warehouse was like, I don't like that number.
And the
figure it out.
And Trump said, just give me 10 minutes. And they came back, gave the envelope.
Yeah. Like the tariff rates, the initial tariff rates. They were like, you know what? Just Trade balance, that's the tariff. So,
Yeah.
excuse you? So yeah, like right now, like we still have a couple of catalysts this week. We have PCE data tomorrow, which I think would maybe be a little bit more clear. Because it's not like on survey data. It's on the rest, right? And then we'll see.
This is exactly
the survey data.
Talking yesterday with Toby, like 2 days ago. Me, you, and him on Discord were talking about this very subject.
Yeah.
Yeah, so 30-year bonds from people will see.
Yeah, it was nuts. If you bought those, you were laughing to the bank.
The 30-year wasn't that good because the 30-year is never a good deal, but the 10-year was even better deal.
But the 30-year with a 15 yield dropping to zero, how much money you make on that? You just print money, like it's crazy.
Yeah, but whatever the yield is on the 30-year, because it's 30 years, by time like inflation.
But you can make it instant. If you see changes in the yield, you make it instantly.
Yeah, you can sell
right.
it.
So it's like, yeah, like it's like I think a 1% change is like a 5 or 10%. Like I don't quote me on it. It's like it's nuts. The return is nuts.
It's massive, yeah. But
because at 10%, every 7 years you're doubling.
Yeah.
So it's like at 15 you double every 4. So every 4.
But to keep in mind,
10x return.
But to keep in mind, though, the environment at that time when it was like 15%, it was like double-digit inflation.
Yeah, and sustained.
And sustained like for a decade. So,
and the Fed didn't have any trust, which was my biggest thing here. Is the trust? You need to trust what they say.
Yes,
you need to trust them.
With today's inflation, that percentage sounds wonderful, but back then, when inflation was like double digit, it wasn't a good deal to get. Why is Trump media up 27%?
Because Trump is Santa. Because Trump is Santa. You got to believe in Trump. Trump is Santa. They're merging with a fusion company, apparently.
Of course they are.
It's absurd. And funny enough, I bought DJT I bought 2 call options on DJT 2 weeks ago. They were 94% in the red. I was losing all my money on those calls. Now they're in the money by 100%. Outrageous. This was a lot of play because I heard a rumor that DJT was gonna come up with an AI play. They were gonna bring Trump to Truth AI. And I was like, what are they talking about? And then, but no, they are merging with a fusion company right now, and the market is bullish on it, and the stock went 27%. It's right now sitting at 27% up. So yeah. So now I bought 2 calls on it. That's gonna be my Christmas dinner.
What are you having for dinner? You having steaks?
No.
Like prime rib?
No. Venezuelan food. We're cooking it on. We were cooking it on Sunday.
Are you
yacas and things?
Are you barbecuing or is it like cooked?
No, it's cooked. So it's like we make like this. Like in Venezuela, we have hallacas in Maracaibo. It's like a closed boiled beefcake kind of thing. And it's like
is it like tamales? Like the
similar to tamales, yes, but it has more filling inside.
Yeah. Nice.
That's the plan. Yo, by the way, so the one I wanted to talk to you about, which is looking insane because of what's on my desk, and I made a trade on this. I was telling you guys that I wanted to make a trade before the earnings because the market was getting punished. Like this is what happens when the sectors get punished and you're not looking at individual stocks within those sectors. And it was such an interesting day. Yesterday and the last couple of days, like we just seen sort of negative sentiment in the oil AI sector. Everybody's getting punished equally. Like everybody's going down 4, 5, 6% because there's just no trust. But if people don't look at the numbers, they're just selling, running through the door. I think that's a problem, right? And then I looked at Micron, which is a memory manufacturer. They make like a RAM and video RAM, like long-term RAM that is long-term memory, which is really profitable for them, right? And I was looking, and one of the things, my girlfriend built a PC a month ago, Okay. And a month ago, she managed to get all of her components for really cheap. But all of a sudden, I keep always paying attention to computer prices. And some of the components were going crazy. Okay. Memory RAM went from $60 to 200, right? We're seeing SSDs go from like $100 to 200-300. So it's like the increase is drastic. It's 100%, 200%, which usually with graphics cards, you can't see it when there is not enough supply, but on these components, you don't see it, right? And I was looking at the story of Micron, and I'm seeing, okay, Micron tends to beat. It's a pretty solid company. They tend to beat. They tend to do really well. But right now, they're still getting punished. And their product line just increased. And they actually are not going to produce for the consumer because it's more profitable to sell to AI people. And I was like, the market doesn't seem to be valuating this, right? So yesterday, I bought before the market opened. I ended up buying a little bit expensive, 230, 240, right? I think, let me do a horizontal buy. So I bought around here, right? I bought just before the open. It was like around there. And then all of a sudden we saw the drop from yesterday, right? But they had earnings. And I was like, look, like earnings tends to be a time that is like dangerous. You don't never know. Like the company might beat every single metric and you still go down.
It's extremely dangerous to trade around the
Correct.
earnings, especially prior. Yeah.
Correct. And but again, this was a play that I was like, this is crazy. Like if these numbers are real, and I started digging and digging and digging, I was just like, I need to make a position before, and then I'm going to make a position after. But I had to make sure that I was in it before. And I was like, great. If I get in after and it goes down, I'll just get it cheaper. Like, I don't care, you know? But if it goes up like it did, it just did a bounce of, like the bounce was pretty nutty from yesterday's low till today. It's around 15%, 14%. But from the lows, it's sitting at almost 16%. That was the bounce that it did. Market was expecting around 8% move, but they blew it out of the water. The results are insane, right? And this is where I want you to see. It's like this is a company that makes in sales around 37 billion. They're pretty well cemented in the semiconductor space. They have been going up quite substantially. Like if we look at the daily, we're saying that since April, they've gone up almost like, well, that's 140. That's almost 200%. So this company, there is value here. Now, they had missed at some point in the past, they had missed earnings and the guidance wasn't good and all this different stuff. But we're seeing that the AI build out continues to just want everything the market can make, right? And they are one of the companies that is likely to take advantage of this. And then I was looking at the numbers and I was looking at a P ratio of 34, which is, you know, for the semiconductor space right now, it's pretty hefty. You know, I think NVIDIA is sitting at 50, but it's NVIDIA.
It's NVIDIA,
but they were sitting at 34. Now the forward PE was sitting at 7.9 yesterday, or 7.77. And this, like, based on the guidance that they gave for the remainder of the year, this is a gift. It's a gift. Like, you're paying 8 times a company that's about to go from 40% gross margin to 67% gross margins. We're talking about NVIDIA margins. We're talking about a forward PE that is like, has to grow. If we continue to see the AI build out happen, they're going to continue to see this boom. And that was like, that's been one of the sort of, I'm trying different things out. But yeah, like that was one of the things. So I saw it and I was like, look, like I just want to get in beforehand just to make sure that I'm at least have some exposure, because I had a couple of people talk about this stock and I was just like, oh, like I'll do it later. I'll do it later. But then I started seeing their name in the news and I was like, like I know this company. I know Crucial. Crucial is a RAM provider. They're exiting the consumer market because the AI market is way too profitable and it's guaranteed. And there's the cyclicality is non-existent yet. This company boomed, amazing results. Earnings per share blew it out of the water. They're now going to be declaring I think they're going to declare a dividend now. It's like, boom. Earnings per share for next quarter is a growth of 100% from expectations.
They're going to declare a dividend?
Yeah. So they're going to have a 11-cent dividend. Nothing. Like NVIDIA, just to say that they're a dividend company, but not better than that.
What's the yield?
What's the yield on that?
Yeah, it's less than 1%, right?
Less than 1% for sure.
Okay. So it's just a symbolic dividend.
Correct. But yeah, this was where it's like the beat was by $1. So it was at like a 38% beat Q1. and then Q2, this was the expectation, and this expectation is wrong. It's actually even higher.
That's how NVIDIA used to be. Do you remember like a couple of years ago?
Yes. So right now it feels that Micron is where NVIDIA was when nobody wanted to buy their chips, and they had a warehouse full of the AI chips, and nobody wanted them because they just created this brand new thing. They didn't create anything new, but the technology is so demanded, and people didn't invest in this cycle enough because during 2022 we saw the downward cyclicality of chips. So people actually reduced production, and now we're seeing the ramp up of production again, but it's going to take some time for that to come online. They are online. They can take advantage of that for the next couple of years. Bam. Bam.
No, I'm sold. Like I have to look into it if I'm going to make an investment myself. But your case is compelling, sir.
It's a like, and this was the thing. It's like this was like a it's like I had to get in just in case that they did, but it's like they're expecting like revenue is expected to grow drastically. Like we're going 26, like, and this, I think this continues. Like if we continue to see the AI build out, so I just don't see, like, on the one side, financing is slowing down because we just don't see the money coming in from these companies yet, because the AI build out, like the AI software is still not out there, but it is. Like if you look at Adobe, Adobe's growing customers. If you look at Microsoft, Microsoft is growing customers. If you look at Amazon, if you look at Google, if you look at all of the big people, they're selling more. So the cloud business is there. What will happen is that we're probably going to see a little bit of a slowdown by the players that are mostly over-levered, Oracle, OpenAI, right?
That's basically it. The rest of them are fine.
Everybody else is fine. If you hear Microsoft says, yo, like, it doesn't matter if AI doesn't work. I can use the compute for my businesses. Have you not seen what happened with AWS? When AWS, half the internet goes down. You can't have that. You need more redundancies. You need more systems in place for those services. Like, how much does Amazon lose on a day that their servers are not online? It's insane. So you can't take that into consideration. You have to, like, you like right now, the amount of compute we need in the world is 10x. So the AI build out will happen. It will happen. They're not going to stop projects halfway through just because, like I was telling, this is not China. This is America. In America, you finish stuff. Even if it costs you, and you have to get it done because you have contracts with other people, otherwise you get sued to oblivion. They're going to take everything you own. So yeah, for me, I think right now is that the AI build out will continue. Like, I think we're very early into the AI infrastructure play. We are seeing software come online. Yes, usually the way that software plays is like software is free. You learn how to use the software. You become dependent on the software, and then I'm going to charge you a subscription. That's what happens.
Do you know right? Going to accelerate the AI build out is if the hyperscalers can show productivity from it, because
but they already are. Facebook did, Amazon did.
Yeah,
they both did. Google did.
It wasn't okay. Google is like in a category on their own, okay, because they make the chips, they buy the chips, so they are like in their own category. But the rest of them, they have to buy from NVIDIA in order to justify the very expensive capital expenditures they do every year buying semiconductors and building those data centers. If they can show to the market that the productivity is up, they make more money from it, then they have a blank check to spend whatever they want. Nobody's going to question anything. But Oracle showed something different the other day, and OpenAI, with that giant checkbook that they've been using for the last year, and we don't know if those checks are going to bounce. That's what worries me a little bit. And I'm not saying the AI is just a hoax, that it's not going to happen. It is going to happen. In our lifetime, like in the next 5 years, we're not going to recognize the world that we're living. But it might not go as smoothly as people believe.
I don't think so either.
You don't think so, right? Okay.
No, I don't think so either. And I think there's going to be hiccups. There's going to be issues. Yeah. There's going to be, because the humanity there's still humanity in the AI play, right? So if you look at Oracle, what price did I tell you I was going to be looking at this company if it happened?
160.
Right here. This is the range that I will start looking at the company. 160, 150 is the price range.
What's the level that you're gonna be all over it?
I mean, all over. The thing is again, you remember that I told you it was 150, 160. If nothing else goes down, but everything has been coming down.
Okay, what's the level that you're gonna call me and tell me exactly what you told me about Google?
The thing is like you know, I like Google. That's why I like Google. You know, it's like that's the problem here. So it's like this has to go down way lower. Like it's like so much more. Like the thing is like it's looking interesting. Like, look, the gross margin is high. They're able to pay for all of these things. Like, it's hard. It's hard to say. It's hard to say because it's like, because I haven't done the research. You want to know what it is? I haven't done the research, so I'm not able to tell you that I'm like Google. It's like
I'm just. It has to get into a level that I'm really interested to start looking into it. You know,
like I believe the data center plays are starting to become appealing. Some of the data center plays are starting to become actually fairly valued. So
I want to go so down that every risk has been priced in. The worst case scenario has been priced in. Then I'm like I'm buying like a sizable position. I'm adding 5% in my portfolio, but that's lower than your estimate. Now your estimate that the number that you gave 140. 150,
150, 160, 150,
and to be fair, you told me that when the stock was like way higher than this. It wasn't like yesterday. So at that time I agree with you, but now as we're looking closer, I was like, I wanted
this a company that look at the volume. People are starting to pay attention to the company. The thing was like being friends with OpenAI, like being friends with like getting a signature from Sam Altman was like the biggest. Oh my God! Like it was like getting a signature from Michael Jordan, from Kobe.
You just got made. Yeah. You just got made like in the mafia. You're like initiated in the.
This is life. Welcome to your new life. Like the reality is not that at all. You know what I mean? Like OpenAI is the leper of the industry because it's like, oh, we're going to spend $1 trillion in AI. And it's like, from where? Where are you going to get the money? You think money grows on trees? You're going to pick it up, huh? Like, and all of a sudden it's like, oh, we need governments, we need things, we need this, we need that. Why?
They're going to end up going public like sooner than they want.
Yeah. And sooner. I think so. But then the thing is like, will they be able to raise by going public? Because the market is going to punish them because now you're competing with the big boys. And you don't have the infrastructure that Google has. You don't have the piggy bank that Google has, that Amazon has, that Meta has. You don't have that. And you have to build it.
And who wants to buy $500 billion market cap at the IPO? What are you making? There's no upside. Like, you know, like, when you buy at the IPO, you want to buy something really, really cheap so you can have like significant upside.
Yeah. So it's like, will we see? Could we see like the initial pump or the euphoria of OpenAI and then the whipsaw down? Yeah, 100%. Can I buy OpenAI? Yeah, I'm not going to pay I'm not going to pay what is it? 1.5 trillion is expected to go at IPO right now.
Yeah, what they expect is a different story. Now it's valued like $500 billion.
It's a software company. You know what I mean? It's like. It's a software company. So
for me, they have like 3 employees.
Yeah. And it's like, and then the thing is like they become prime targets for acquisition. Like, it's like for sniping. It's like, like they hired everybody with the hope we're going to change the world. This is like a free enterprise. And now it's like a private company. It's like, if I'm looking for private, I just go to Google. They're offering me how much? I'll just go to Meta. They're offering me how much?
What? Poaching the talent from the rest of the Mark 7 is gonna come in front of them. Like once they go public and they're like, all right, so what the market is doing. Apple is down. Okay, that's not a surprise.
Yeah, well.
Apple is always down.
The Micron play. It's nice.
So the market up.
Yeah, that was the thing. I couldn't wait. I was like, look, like I'm willing to take this risk. Even if it goes down 10%, I will be a buyer. Like this is looking so appealing. That Micron, 15% up, $260. What a jump. Yeah. But yeah, Oh man. All right. Anything else you want to talk about?
That will be it, sir. That's
Oh man.
that's
Yeah.
enough. That's enough for today.
Like it does feel like this is a little bit of risk on sentiment. I'm bullish on the day. We potentially gain all the gains back. Could it turn around at this point? I'm not like intraday. This could do whatever it wants. But I'm like the thing is like there's continue. I continue to see bullish trends coming into or bullish forces coming into the market. That I'm bullish for 2026. I'm bullish for 2026.
It's just the beginning of 2026 that looks a bit questionable.
And it looks a bit questionable because it's like because people are looking to like capitalize. It's market dynamics. Like if there was no taxes,
Yeah, a world without taxes is like, yeah.
So yeah, I gotta pay attention to markets. Everything is up for it. Well, Fluence is up 4%. No, Fluence is up 11%. There we go. Now that's money. Yeah, like companies like Fluence, like energy, like right now we are seeing there was a couple of winners and now all of the winners are starting to as people start to analyze who will really win from the rainfall of AI, because the rainfall of AI is coming. It's already here. I'm telling you, it's already here. But yeah. All right, everybody. Thanks so much for watching. I appreciate you all. Don't forget to hit that like and subscribe. If you have any comments, don't forget to leave it in the comments below. If you have a question, don't forget to leave them in the comment below. Check out our portfolios and check out Timothy's course. It's free for all of the Market Boss subscribers. So make sure to check it out. See if you maybe get something from the altcoins course that he has. Oh, man, I swear to God. And then crazy market. Holy smokes. Hopefully we just cool it. Like I just like calm down. Let me enjoy the holidays.
Are we live or?
No. I'm about to go. All right. Thanks so much for watching, everybody. Peace.
See you guys.